Okay, so picture this. January 3rd, 2026. The world wakes up to some absolutely stunning news. A surprise U.S. military strike right in the heart of Venezuela and the capture of its president. And this one event, man, it just set off a chain reaction, shaking up governments and sending this massive shockwave through the global economy.
And this is the announcement that dropped, right, from former President Donald Trump on his Truth Social platform. Just boom. No warning, no heads up. A direct confirmation of an absolutely unprecedented military action against a sovereign nation. An action that immediately put the entire world on high alert.
So the big question is, how did it come to this? I mean, how does a relationship just simmer for decades and then suddenly boil over into a foreign power capturing a sitting head of state? In this explainer, we're going to break down the long, messy road that led to this moment, the immediate shockwaves it sent through the global economy, and what it all means for the future of energy.
So, the operation itself, it was incredibly swift and, honestly, shocking. From what we're hearing, it was this coordinated assault. Helicopters, missile attacks, all hitting key spots in the capital, Caracas. And the objective was just unbelievably audacious: grab President Nicolás Maduro. He and his wife were then flown out of the country, reportedly to face charges in the United States.
As you can imagine, the international response was immediate and intense. Right away, Venezuela's neighbors in Latin America, Brazil, Colombia, they condemned the strike. The European Union was urging caution, a return to international law. And back in Venezuela, the defense minister denounced the strike, and the military said they were ready to deploy everything they had in response.
So, how did we get here? Yeah, this really didn't just happen overnight. This was the explosive end to a relationship that's been going downhill for decades, but it went into hyperdrive over the last year and a half.
I mean, just look at this timeline. It really shows you how quickly things fell apart. Things were already bad under Hugo Chavez, sure. But that disputed election in 2024, that was the real flashpoint. After that, it was just one thing after another. A naval buildup, seizing an oil tanker, a full-on blockade, and then bam, the military strike. In just a matter of months, a diplomatic crisis had turned into a full-blown military war.
Okay, so let's shift gears and talk about the economic fallout. Because you better believe the second those first reports hit, the impact was felt thousands of miles away, right on the global trading floors. This is exactly where geopolitics stops being abstract and starts hitting your wallet hard.
The market's reaction was, well, immediate. Brent crude oil, that's a huge global benchmark. Its price just surged. We're talking a jump from around $58 a barrel to over 62. That is a huge leap, and it's driven by one thing: pure, raw uncertainty.
And of course, that price surge meant big gains for anyone invested in oil. You look at ETFs, those are exchange-traded funds that track oil futures, and they just shot through the roof. I mean, funds like UCO saw a jump of over 4% in practically no time at all. The market was pricing in conflict, and it was doing it fast.
What we're seeing here is a classic, textbook example of something traders call the geopolitical risk premium. Basically, it's the extra cash tacked onto a barrel of oil, not because of simple supply and demand, but because of fear. Fear of a supply disruption, fear of a bigger conflict. It's literally the price of instability.
So you might be asking, why such a massive reaction? Well, first off, Venezuela is a major player in OPEC. Any disruption there is going to matter. Just the blockade alone could yank 600,000 barrels a day off the market. And here's the kicker. Refineries along the U.S. Gulf Coast, they're specially built to handle the kind of heavy crude that Venezuela produces. They can't just flip a switch and use oil from somewhere else. That makes any supply gap really painful.
Okay, so with Maduro gone, the immediate question for everyone is, what now? And it turns out, planning for a post-Maduro Venezuelan isn't new. It's been happening for a while, both within the Venezuelan opposition and clearly within the U.S. government.
And let me tell you why the stakes here are just astronomically high. Venezuela is sitting on 17% of all the world's proven oil reserves. That's more than Saudi Arabia, people. It is the single largest stash of oil on the entire planet. You get that oil flowing freely again, and you could completely reshape the global energy markets as we know them.
So, the Venezuelan opposition actually has this detailed 4-step plan ready to go to try and revive the economy. Step 1, lift sanctions. You got to get cash flowing. Then you create a solid investment treaty and rejoin the World Bank's arbitration group. That's all about building investor confidence. And finally, you tap into the big banks like the IMF and World Bank to fund the absolutely massive rebuilding effort that's needed.
But,
A plan on paper is one thing. Actually pulling it off, that's a whole different story. History is just littered with cautionary tales about forced regime change, and the road ahead for Venezuela is full of huge risks and a ton of unanswered questions. Now, those who support this intervention, they argue that Venezuela could be different. They'll point out that there's a recognized president-elect ready to go, that the country had a long history of democracy before Chavez, and it doesn't have the deep ethnic divides that ripped other places apart. But you just can't ignore the long shadow of past interventions. The absolute chaos that followed regime change in Iraq and Libya, that serves as a really powerful and frankly sobering warning.
And that's a point echoed by experts like Jorge Leon, a geopolitical analyst at Ristad. He basically says, look, history shows us that forcing a regime change almost never stabilizes the oil supply quickly. In fact, it usually does the opposite. It creates even more instability for a while.
And so all of this leaves us with the ultimate question, doesn't it? The U.S. played its hand. The world's largest oil reserves are now officially in play. So is this massive gamble going to stabilize a volatile region, and with it, the global economy? Or did we just kick open a door to a whole new, unpredictable way of chaos? Whatever the answer is, it's going to define geopolitics and the energy markets for years, maybe even decades to come.